JB here. JB here. Hope everyone's doing outstanding. Wednesday, December 17th, 3:30 on this fine afternoon. Really quick rant. Talk about the market. Some names I'm looking at go from there. S&P down nearly 1% here. NASDAQ down over 1%. Bitcoin's down nearly 2%. Small caps down over 1%. Continuation of the slow melting sell-off we've had this week. S&P looks like it's going to be on track for its fourth straight session of declines. Um, this morning, markets look like maybe we're going to find some support, a bid. Markets were in the green heading into the morning hours. Then the report came out from I think it was the FT, the Financial Times, or the information, one of those outlets, saying that Oracle was having trouble financing one of its data center deals. I guess 10 billion worth. Owl Capital, right? OWL is the ticker. They do a lot of financing. So supposedly they're stepping back from that deal based on concerns around Oracle's debt rating, right? I guess as their rating goes down, the cost for them to get this financing goes up, and when it gets too high, obviously Oracle kind of like steps away. Whatever it is, supposedly Market Watch or one of these outlets also reached out to the information and to Oracle to find out about or get more color around this. Supposedly they said, the article is incorrect. Whatever the case may be, now FinTwit is littered with all these folks posting commentary around this, and it's not the first thing. Today's not the first situation in regards to what's going on with these data centers. Right, last week, I don't know if it was CoreWeave or one of these. There was one of these data centers supposedly was going to have a delay, whatever, I don't know, 6 months. The issue or what creates this environment of uncertainty or creates volatility with some of these names in the AI space because of the circularity, right? The big circle jerk. So because of this, even if it's just a data center, that data center means chips. The chips means energy. The energy means all these different deals have been done over the last the last couple of months. I mean, the last couple of years, they all depend on things happening, right? So even you look at Nvidia's demand, all that's based on a lot of future, right? A lot of the future things. So because of that, any snafu or slowdown in the possibility of all these data centers coming online, it just gives an opportunity for folks not only to give pause and take profits, but then it also creates opportunity for these bears who've been trying to find I should say find. They already found the AI, right? That's the next bubble, finding cracks in the foundation, right? So who knows? I was talking about this morning, right? It seems like every couple weeks there's some report that shakes markets. I, you know, to me, it's like the thing that would scare me is the situation that comes out of nowhere, like from right field, that the canary in the coal mine, right? The black swan event. To me, all this is out in the open, right? So when everybody knows about it, you would think the market is a great forward-looking pricing mechanism, right? The best on the planet. It should have a lot of this baked in, right? That's just how my mind works. Maybe I'm wrong with this, right? So uh if you take a look at the market today, it's like a slow, I wouldn't even call it a meltdown. The SPY's been stuck at 672, 673 for pretty much most of the afternoon here. So it's tough for me to, on one hand, say, okay, here, get some hedge puts to protect from downside. But the other hand, it's like I'm number one, obviously, but I'm a little more cautiously optimistic. So I want to not lose money on the puts and then have an opportunity to use that to deploy on some bounces. So that's kind of how I'm trading things here today. 679 was that big area on the SPY. Obviously, we're substantially lower than that right now. But again, to me, it's like if this was a whole huge, I was saying this morning, I don't know if I post on FinTwit, if this is like the Lehman moment, right? There's these moments that everybody likes to point out that was the start of the financial crisis in 2008. When all those events were happening in 2008, some of that wasn't out there, right? The big weekend meetings for the bailouts and all that fun stuff. I mean, I don't know. We'll see what happens here. Obviously, I'm not going to sit here and say I'm an expert in any way. I don't have boots in the ground in these plants that are being built or all this. All I have is the same information everybody else has, and then history. Right? We all have history lesson. Usually, history, the best indicator of future performance is past performance, and the best indicator of what might happen in the future is what's happened in the past. So I've seen this so many times in the past, especially when events like this morning happen, all the bears come out of their cave, creating credit default swaps on Oracle, right? I mean, I think they have 120 billion dollars in debt. I guess they're, but people are trying to do the math to figure out how everything's going to get paid for, right? So that all makes sense, but anyway, so take things with a grain of salt. So I think I posted this, credit default swaps were an issue a couple of weeks ago. They'll continue to be an issue. I was making a big joke. I would say a joke, but I was calling it the great circle jerk, right? There's no doubt, like all these different deals that have been done with parties that are intertwined. It's almost like you would think they're competing against each other. Even competitors are doing deals with each other. Just so the fear would be that all it takes is one of those partners to have a big issue like Oracle. If it has a default, obviously that'd be a serious issue. Then all those different parts of that wheel start to the spokes in the wheel start falling apart, and then we have a big situation. I don't think we're at that point, right? The thing is, like back in 2008, there was the mortgages, right? The credit default swap, the mortgage-backed securities, all that stuff, all those products that were set up. There was a huge issue in regards to debt. Here's some of these data centers and the debt, even with Oracle right now. It's not like Oracle's on the hook for $100 billion of all these deals. That's not where we are. And the funny thing is this morning too, it's like, oh, Owl Capital walked away from Oracle, or Oracle walked away from Owl Capital. Who knows what that is? But to me, I'm like, oh, that's great. That's how the system works, right? If you are getting a deal to finance these data centers and it's too much and they're charging too much in regards to the rate, and you step back, that's a good thing, right? As opposed to Oracle saying, oh, I don't care how much it is, let's just get the deal done. But people are not spending it that way. It's all so anyway. Not going to go on too much of a rant. I got to certainly look at this in regards to some of the other spokes in a wheel that could be an issue going forward. But to me, I'm cautiously optimistic. I look today again on the watch list, and like on days like today where we're down nearly 1% on the SPY. Actually, SPY's down 0.98% right now. I would expect barely a stock or two to be in the green, and like half my watch list is still in the green. And take that with a grain of salt because some of them are names that have been beaten up, or some sector you take like the Chipotle's, Shake Shack, DocuSign, Lulu, which is still going up from its earnings, TTD, Gilead, Burlington, Cracker Barrel. Like I can go on and on, but to me, it's not like a market that's screaming, "Oh my gosh, we're just in the stages of some crazy pullback." We'll see. SP's down over 1% for the week. We have Micron earnings after the close. Maybe that could ease or lay some concerns. Implied move, I think I posted earlier today. Is it 9%? Of course, I don't have it straight up here. 9% implied move. You take a look at its average move over the last eight quarters, 9%, 9.2%. So that's a tough one to trade unless you think it's either underpriced in regards to its move. So if you think there's going to be a 15, 20% move on Micron, I mean, I don't have the chart handy right now, but to me, the way to trade would be SanDisk. But anyway, that's overall market. Similar to last Monday and Tuesday, to me, I'm not going to try and chase some of these moves. I'm more apt to try and get some positions to play for bounces, right? So I'm still looking at Reddit, and Reddit out of the gate rallied. So it was tough, 235 by about 10 o'clock today, and it's been chopping around. So tough to make money on Reddit calls right now, unless I was looking to play for a move higher into the end of the week. But even then, I mean, I'm still, who knows what tomorrow we might have a gap down. So I don't want to just get the calls there. So, and same with Roku, Lemonade. I mean, take a look at Lemonade today. Another one of those frustrating days, all the way up to 84. Was it $84 at the open? 85.20 right out of the gate, and then chopping around, and then it's back under $80 again. So it seems like at first glance that it's performing great, but if you tried to trade the calls this week, you're probably seriously in the red. So some of these days, best to just sit on your hands. It's tough, right? I'm sitting here staring at the streamer. You want to be doing some trades, but sometimes the hardest thing is not doing them, right? So that's kind of the overall market there. Also, small caps, which was leading the charge this morning. Even the S&P was down 0.5%. Small caps were solidly in the green, and then they reversed course. Hopefully, they can start leading the charge. All right, that's overall market. Just quick on individual names. First, just CGC. And CGC, I think, was 220 overnight. I don't know if it was Sunday night into Monday, but opened in the green, rallied all the way up to 228 after the open. Locked some of my April strikes in for 100% to cover cost. And then I talked about 199 being a key spot. I want to add more strikes. I still have some January calls too, so I'll just continue to hold those. And then the let's see here. Sorry about that. The worry I have is if once they finally do sign this executive order to reclassify cannabis, if that's what it comes down to, is it going to be a sell the news event or is it going to be a monster squeeze? Obviously I hope the latter, but can't rule out the former either. So I'll just be patient and then be ready to load more calls if there's a positive reaction. In sympathy with CGC, I keep looking at IIPR. I was looking at the 70 January strikes today. I maybe tomorrow. It was all the way up nearly hits eclipsed $60 in the morning, and then sold off here all the way down under 58 when red to green, green to red, and then back red to green. Maybe I'll get some 70 strikes. So being patient there as well. Uh, and then the other names here, RH is silently higher today, and unfortunately, it's up 1.7%. But you would think, oh wow, doing great on the calls, but no, I need this thing to go. It needs to rally 5% tomorrow and 5% on Friday, but still riding almost freebies on RH. So I'll continue to hold those 190 strikes. And I put on the watch list. I think if this continues, RH continues heading higher, even if it's slow days. I think it's headed over $200, and earnings kind of like being at the bottom. So I'll continue to look for opportunities on RH. Solar Edge was great in the morning. I was actually looking to close some out at the open. They were solidly in the green. I'm like, oh, they're going to be a double by 10 o'clock. Hits 30.83 and then has done nothing but melt lower ever since. Down 1%. I'll still look for some more opportunities on Solar Edge. Frustrating to say the least there, but comes with the territory, right? When Solar Edge has huge moves, the calls are up 500, 1,000%. So more than offset having to patiently wait for that move. So that's that. I'm trying to think of some of the other names. Still, I keep talking about Reddit. At some point, there'll be some deal there. 1-800-Flowers. Another strong call session. Let's see. I didn't have the accurate numbers up here. 4,000 calls traded today versus 200 puts. $5 is the key handle. I wouldn't call it the squeeze, the trigger point, but gets over $5. I think it's off to the races. I think that's about it. I'm trying to think of some of the other things I've been looking at. Funny, I had those deck calls, right? So I had the last of the 105 deck calls, and yesterday, day before, I'm like kicking myself. I'm like, is deck going to rally to 110 this week? And then sure enough, it's down here at 102 and change. So the timing I didn't time exactly the top on deck, but if it holds its ground this week, I'll finally look to get some January strikes. And that's it. I think the name of the week, or at least for me, is being patient, and it's being. You got to keep things kind of in check, right? It's very easy to let your emotions and all these headlines get to you, and you see people. It's like they lose their mind, especially some of these bears. They just get overzealous when they see, oh wow, this is it, this is the moment. Hey, and maybe they're right. I don't want to dismiss it, but to me, it's like if the market is ready to crack, like the market, the VIX will be a heck of a lot more higher, in my opinion. There'll be a lot more volatility in some of these names, and yeah, it just doesn't feel like it to me. And I'm not saying it's can't don't trust your gut sometimes, but to me, my gut says that at some point there's gonna be a bounce this week, and it'll be a playable bounce. So that's what I'm waiting for. Anyway, let's have a great day, folks. I'll be back. Rock and roll.